Ladies and gentlemen, Joshua Salvetti, welcome to another weekly recap over here at the High Performance Trader, right? So we are going to be discussing today the week ending 11/24/2023, that's Thanksgiving week. As we go into the third week of November, we're starting to see very, very bullish sort of market conditions. You can see over here, daily time frame, we are continuously making moves back up to previous supply zones, right? And today, what I really want to talk about, right, and really dive into, not just dive into the week, right, not just dive into trades we took, why we took them, what we were looking for, right, but my goal today is to really dive into what constitutes a good edge, a good trade, right? Because constantly our goal as traders, right, is not just make money, but money is a byproduct of how well we can follow our process, right? How well we could stomp out of losers, how well we could stay in winners, right? It's a very big mental, psychological game, right? So my goal today is to break down exactly what it is I look for when getting in trades, when getting out of trades, etc. Right? So I've previously came up with a new way to grade our performance. Let me just, one second here. Let me just pull up. I put this up on the Discord. So it's very important, right? Anybody that's on the Discord, part of the team, come check this out over here in Trading Metrics, right? So Trading Metrics, before we go any further, Trading Metrics is not only a way to, like, we're always talking about what it takes to become consistent, right? Identifying and adapting, right, to market conditions, but more importantly, understanding the data on yourself as a trader, right? How well am I trading? What sort of trades am I taking? Is it reversals? Is it continuations? Can I actually follow my process? So trading metrics is a way to collect data on yourself, right? And understand what sort of trades are actually working for you, how well you're following your process, right? So over here in the Discord, I log every single trade we take. Not only trades we take, but trades that I've seen, right? So this was a trade on Friday, beautiful break, retest, open print. And what this does is really solidifies what's working, what our edge looks like, right? What sort of trades am I looking for each and every single day? Because until you have a clear vision, right, a clear idea of what sort of trades to take, you're not going to find them, right? So trading metrics is very critical. It's a way to identify our edge, right? But more importantly, trade performance, right? So recently I speak with a lot of traders on a consistent basis, right? And one topic that constantly comes up is, how do you grade your performance, right? How do you grade whether it was a good trade, bad trade? Is it P&L? Is it profit? Is it percentage? Is it ROI? Is it risk management? Like what constitutes a good trade? So I just came up with this 8-step kind of checklist criteria that I run through after each and every single trade, right? So you can see here, trade performance. So after every trade, I go through and see if I abided by these guidelines, right? So number 1, identified and traded with market conditions, check, right? Meaning I traded with trend, I traded with the overall collective mind of the market. Number 2, I predefined my risk, right? Identifying an area to stop out if my analysis is proven wrong. Number 3 is I applied a 30% or less, right, hard stop. Number 4 is I identified large money controlling the critical level via chart pattern, right? So I'm going to break into a trade I took over the week where I didn't do that and why it hurt. Number 5 is I traded off an area of value, right, or critical level. Number 6 is I acted without hesitation or reservation, meaning I identified my edge and I acted. Number 7 is I traded with regular position size, right? I didn't over leverage. I didn't add any external significance to the outcome of the trade, right? We're going to break down why that's important. And number 8, you took profits or stomped out based on structure, right? You didn't just take them based on emotion. You took them based on structure or target. And then based on how well you did, right? So for the example, I did 6 out of 8. I got a 75%. And now what this is going to do is help you get an overall idea on how well you're sticking to your process, right? So super important. Grade your trades over here, trading metrics level. All right, so without further ado, let's break into the week. So one thing I really want to point out right before we get started is the conditions of the market, right? So each and every single day, our job, I know you guys hear me say it all the time, is to identify and adapt to market conditions, right? Now what that means is it's up to us to understand who's in control of the market, right? Are buyers in control? Yes. Are sellers in control? Yes. Does this mean since we're in bullish market conditions I don't take short plays? Absolutely not, right? But at the end of the day, demand zones, right, areas where we're looking for buying pressure, are going to be stronger than supply zones. Granted, we're in an uptrending market, right? It's very important. We always talk about this, to react to the market information. We do not predict it. Okay, now this is exactly what I'm talking about with that, right? What I'm talking about here is we're not sitting here looking, right, for the trend line to break. We're not sitting here looking for conditions to change. We're not sitting here predicting that something's going to happen. Instead, my goal as a trader is to react to the current market conditions, react to the current market information. That's my goal over there. Hold on one second. I think, what's up, Kyle? Good morning, buddy.
Okay. What's up, man? How you doing?
Good, man. I'm super glad you came. I'm over here just sort of running through the week. It looks like everyone's probably a little busy due to the holiday and stuff like
for sure.
and stuff like that. But I just really wanted to still go through the process, go through what we seen, what we were looking for the week. Super glad you I'm super glad you showed up, man. That's awesome. So I was just in the middle of I was just in the middle of kind of breaking down this new thing I put over here in the Discord. So basically what it is a way to grade your performance, right? So this happens to me a lot, right? Is like, we'll start to see some consistency. We'll start to see some things working. And then I'll kind of neglect what was working previously, right? We fall into that complacency where it's like, I'm doing well, so I'm just going to pop open my computer, throw on some trades, call it a day, right? And it's like, no, that's exactly the sort of behavior that's going to lead us right back into the same inconsistent behavior. So I came up with this thing. I put it over in Trading Metrics in the Discord. It's just like an 8-step way to grade your performance. So it's really cool. So because a lot, I talk to a lot of traders and they're like, how do you grade your performance? Like when you're journaling, right? Because journaling, it's super important part of our trading. It's like, what is it you're looking for after you put on a trade, right? Are you journaling emotions? Are you journaling your entry, your exit, a lot of right? So the way I do it so that I can grade myself how well I'm sticking to my process, right, is this little 8-step thing I came up with. And what this does is like at the end of the week, I'll go, okay, how well did I do following my process, right? And on this little grade sheet, there's nothing to do with making money, right? It's an 8-step thing. It's number one, identify that you traded with market conditions. Number two, predetermined your risk, meaning you identified an area to stop out. Number three is you applied a 30% or less hard stop. Number four is you identified large money, controlling the critical level via chart pattern. And that's something I kind of been struggling with, is just kind of like being, the candle closed above a critical level, I'm going to take it long, right? Like, yes, that may work, but there's also reasons why we don't do that, right? So that's something I'm kind of going with. Number five is you traded off an area of value. Number six is you acted without hesitation or reservation on your edge. Number seven is you traded with regular position size, right? Meaning you did not add any external significance to the trade, right? You are approaching this completely objectively. You're approaching this systematic, right? You're not adding any extra emotion to the trade, which is something I've done before as well, and something I'm currently doing, which I identified this week. And then number 5 is number 8 is you take profits or stopped out based on structure, right? So it's an 8-step or 8 or criteria made up of 8 things, way to grade yourself, right? So the example is 6 out of 8. I got a 75%. Now that's on that trade. And now what I'll do at the end of the week, I'll go back and calculate how well I did, my average, right? And kind of pinpoint where it is I'm lacking, right? Like we were just talking about. I identified large money controlling a critical level via chart pattern, right? That's something I didn't do on Friday, right? And that led to a loss, right? And kind of just to show it, it's over here. It was on Qs. So just a quick little idea of what I was looking at here is, okay, let me see. So we had a couple different areas of value, right, that I was trying to trade off of. But you can see here, previous day low kind of lined up here with this previous supply zone at 388.68. And if you look at it like this here, let me just get rid of that. Put it like this. Make it a lot easier. This was my this was my area of value I was looking to make a move off of. Right, so once again, really simple. Our break and retest, larger time frame, and then we had previous day low right here as well. So these were some critical levels I was looking towards, and right off the rip in the morning, we got a lot of buyers coming in defending this level, right, to a T, right. So not only that, if I were to whip out the 2-minute, you would see here at open print we had this little battle, right. We had sellers. And then buyers came in, so buyers defended previous day low, and then they defended open print. So then we ripped above end of day all within this candle, this green one right here. So I'm going, okay, I'm willing to put on risk here, targeting 39168, right? And okay, buyers defended 2 levels. And we closed above end of day, right? So that was kind of my quote unquote edge, right? Because we got to be asking ourselves, why are we taking the trades we're taking, right? Are we taking the trades we're taking because it works for somebody else? Are we taking the trades we're taking because we feel good or we don't want to miss it, right? I feel like in a sense, I felt like I missed the move right here off previous day low. And in a way, there was probably some FOMO in there. And I'm waiting for so much confirmation on this trade that I actually get in at the worst position, right? I mean, going back, we weren't even above pre-market, this critical level in pre-market. And more importantly, there wasn't a clean retest, right? So this is something me and Darren, and I think everyone was talking about last week, where if you're not waiting for the retest, right, there has to be some other criteria involved or like some sort of reason, which I don't really think there's many good reasons to take a trade without that retest. Because I took the trade really, really quick, just went long, and then I ended up getting stopped out right above open print, right? So took a losing trade, and I just really wanted to, and I'm looking back when I'm, going through my journal, and I'm going, okay, where could I have gone? Where could I have looked at this differently? And that's kind of where that 8-step process came up of how to grade your performance and kind of figure out where it is you're going wrong, right? Because like that trader accountability is so important. Like, depending on if you're doing good, if you're doing bad, if you're breaking even, right? All that's kind of like, obviously it's important, but in a way it's irrelevant. We need to get rid of that mysteriousness that we have with the market, right? Like, oh, I don't know if today's going to be a good day. Let's see. And then we start to base the trades we take on our previous trades that worked, right? So obviously there's a point in my life where I thought just because we closed above a critical level, I could take this long, right? Otherwise I wouldn't have done it. So once again, creating that awareness, right? Like, okay, I'm taking this long. Why? And just kind of diving into the psychological aspect of it and being like, okay, well, there was no chart pattern, there was no retest, etc. And we can't really like completely kill ourselves over a losing trade. The goal here is just to like be like, okay, going forward, this is why I'm going to wait for a retest, right? Because obviously, like, someone can tell me to do that, right? But I need to believe in it, right? And this is a firm example of where your beliefs will get in the way of your trading process, right? Because, like I said, for whatever reason, in the past, it's worked for me to just go long when we close above a critical level. In reality, yeah, that may work sometimes, but it's really not validating the conditions of the market, right? Like Thursday was a perfect example of that. We rallied above this previous resistance, right? Previous supply, right? Super bullish indication, right? Like we're cruising right above this. And instead of taking this long, right, just because we didn't want to quote miss the move, right? We were patient, right? We didn't take the trade. We instead let structure form, and it's really cool to talk about what's going on here, because I think there's an edge right here that we could start to capitalize on, right? Because not only did we not get a retest at this level, right, like validating that buyers were in control, and where that retest really has value is it's not just showing that buyers have control, it's showing the sellers stomp out in this scenario, right? So if price was to rally and come down back down to that retest, according to Mark Douglas in A Disciplined Trader, he breaks this down. What that retest is actually symbolizing is that the sellers in this scenario are stomping out of their losing positions. So without that retest, sellers aren't stomping out. They're still in their position, meaning they could just be rallying price to get a better entry on their next sell order, right? Large money does this all the time. They want to make a very large move down. So what they'll do is they'll rally price above that level. They know everybody's trades are at this level. So they'll take all those short positions out because they know the majority of people keep their stops relatively above these levels. So that's what we call the liquidity grab. The price rallies above that critical level, soaks up all that liquidity, and then you get that large move to the downside, right? So going back to waiting for that retest, right? Since we didn't wait for the retest, price rallies. We're not making a move. We're patient. And then price starts to trickle down. And like right at, then we come down for that retest at that level. And now one thing I'm looking for here, right? Because in a way, this is still relatively bullish. So if I want to take a long here, I need to see buyers invalidate this 39223 quote unquote bearish structure, right? Because we're rallying above this level. Now I need to see strength here or somewhere. And where that strength comes in is breaking above 39224. Or you could even do the bottom of that candle, right? So that's how I'm looking. And then there's a couple ways to play this, right? You could be like, okay, well, if this snaps through, where's my next move? Right? And then price rally down. Computer's getting a little glitchy, right? So price rallied down. And basically, though, before I go any further into this setup, right, off open print, which was a beautiful trade, what I want to talk about here is if we don't get a retest, right, what I'm going to be kind of going forward looking into is how can I capitalize on a move to the downside, right? Because how many times have we chased this trade, right? There's been probably thousands of times where I just chase this, and then you can literally visualize sellers coming in, and you're like, oh boy, right? Like you were up 20%, right? Maybe 30. You didn't take profits. Now price is coming down and you're going, okay, do I stay in this trade? Do I get out? And then this massive move happens. And if you don't have a hard stop in, this will really hurt, right? So it's like, just getting to that point as a trader where you're so aligned with the auction in the process of it, where you're like, okay, I'm not long. I used to go long in these scenarios. I'm not right now. How can I capitalize on a move to the downside, right? And like, what do I need to look for? And that's where that 39228 area is going to come in. Because if you can't get above that, right? Say buyers came in and got price above this 392 level, right? Then I would have been much playing longs, targeting upside targets, right? But we couldn't. So it really, validated the bearish market conditions here, right? This is what Todd calls the GBI, the green bar ignored. This is a great way to be like, okay, yeah, there was a little buying, but nothing strong. And price rallied below this level. And now this is where we're presented with that opportunity where we're like, okay, do I just hop in? Right? Because we closed below the level. And if you ask me, I'm going to tell you no, right? Like I don't like doing that because I did that this day, right? And yeah, I caught a killer move, but doing that day caused me to do it Friday, taking a loss, right? So this is where we go into the whole program in your mind, because if you'll do it on that setup, you'll do it on this setup. And if you do it on that setup and win, you're going to do it on this setup and lose. So once again, it's like, how can I approach this in a systematic way? And yes, I understand you're going to miss trades. You're going to miss some winners, waiting for the retest. But at the same time, you're going to create that structure that's needed to consistently see consistent results. So going back to this setup, we sunk right through this. We broke open print. This is a textbook move of the break, the retest off open print. I mean, this was beautiful. I took it on SPY, but it is pretty much the exact same. And then you capture a super high probability move with low risk, right? Why is this trade so good? Yeah. Oh, well, Josh, we made it was $1.50 move, right? Oh, okay. Yeah, that's good. But what's better is your low risk. Right? Because when you enter these setups, right? I'm an options trader. So when I enter these setups, I buy my contracts for 100 and my stop is in at literally like 90. I'm literally risking $10 on this trade, depending on when I get in, right? But if you could get in at a clear, like once I see this candle, I'm in. I'm willing to bet right here because when entering this trade, as long as I have the low risk that's needed, that's fine, right? We've identified that. Hold on, guys. Give me 1 second. I got to get my daughter a tissue. All right, I'm back. So yeah, without going too far away from the weekly breakdown, right? The thing is like I have to remind myself, and it's so important that every trader does this, because if you want to create that state of mind or that person that we're always talking about, the $250,000 a year trader, right? That's our dream, that's our goal. What does he look like, right? And to really break that down and understand that, it's all about low risk, high reward, right? Trading's not about being right. Trading's about consistently having low risk, high reward, right? And that's why we love these levels, because they really give us opportunity to find low risk, high reward setups, right? And that was beautiful right there. I mean, the break below open print, the retest, you enter this trade, put options, shorts, doesn't matter, but your risk is extremely tight, because all what you have to do is close above this level to stop out. I mean, and that's how I looked at it, at least. And then you got that super nice move to the downside, and so on and so forth. So that was a really good day there. Honestly, that was really the only good setup I got that day. Next, I took this long, which going back, I kind of rushed as well. And there's before we go into that setup, let's point something out here. So let me whip up SPY. Look at that chop on Friday. That was garbage. Okay, hold on. So going back to SPY was very similar, right? We ripped actually SPY. Oh yeah, right into open print was right here. SPY was textbook. And SPY, if you look at SPY, going back to what we were talking about, the reason I took this short on SPY is because this structure right here, right? So it's like, how can we identify the shift, right? And that's what you're looking for right there, structure. I mean, you get the rally. We're well above. Hold on, let me. Hold on, computer's going slow. Okay, so you rally into your level or above your level or whatever it may be, and then, like I say, if you're long on this trade, you need to be able to go, okay, when you see this bearish structure forming, now it's sometimes it's not as easy as this, right? But if you're long and you see this, what we call the HPT pattern, you need to get out of the trade. This right here is textbook reversal happening. You rally, break, you retest structure, right? So this is what we call the shift in market conditions. So when we're identifying the conditions of the market, this is what we're looking for when we're looking for a shift in from bullish to bearish. The break, retested structure, beautiful GBI, green bar ignored, sink right below open print, come up, retest, beautiful sell. And now, just like we identified here, structure, right here when we identified the shift in market conditions for our entry, the same exact thing I'm looking for to get out, right? And this is one of our criterias on that I came up with for grading your performance is getting in and out of your trades based on structure, right? So it's kind of, as you go through your journey as a trader, you're going to find, right, where do I take my profits, right? Now there's a couple of different ways to do it. If you hit your target, check. If you're up a lot, I really don't like taking profits just because I'm up 100%, but at the same time, I'm not going to sit here and tell you there's anything wrong with that, right? Because it's important to pay yourself. Now, if you're looking for a more structured approach, and even if you aren't using this to take profits, it's still extremely valuable to understand the shift in the conditions of the market, right? And what I mean by that here is just like what happened here up top, right? When we break, we retest structure and sink. If I'm short here, what's it going to take for me to understand the shift, right? And once again, I'm just using, right, these lows. And once you break, hold on, let me get rid of this, because our downside target on this trade was pre-market low. But there was a couple things before that, right? And I think my first target was not my first, but my next target in this scenario, 45375. Now, another thing, guys, is when we're taking these trades, there's no perfect target. Right? You have to be like water. You have to be completely formless. And what I do is when I'm in this short play, when it looks like this, I'm going, okay, where am I going to get some resistance? Where could there still be buying? Right? Now, based on the way we identify supply and demand, right? There's demand zone here, here, and here. Right? Because demand is nothing other than an area where buyers have previously showed up. Right? I'm sure there's a better definition, but the way I look at demand without complicating this or supply is where have buyers previously been, right? That's our clue. That's another way we identify the conditions of the market, right? Based on previous price, where have buyers previously showed up, right? And here we got 45435, we got 45404, then we got 45375, and then we got pre-market low. So instead of going, okay, I'm going to capture this whole market imbalance down to pre-market low, right? Don't be that naive because that's not how the market works, right? And we've definitely seen in these conditions, if you're not, if you're trading this way, right, which is the way I used to trade, right? I wanted to capture the whole move because the whole move made me feel good. The whole move paid well, right? So once again, ego, right? We're looking at what does my perfect day look like? Capturing the whole move, right? It's really important not to think that way. Instead, it's, okay, where am I going to get met with some buying or some previous buyers if I'm short? So that's how I kind of looked at it. So first we come up, we retest open print, and then we sell off right into 45435, and then we get this bar here, right? So this was one of the first reasons I took profit on a piece of my trade, is because when price rallies and we're not seeing any good, and at this point I'm up a good amount of money, it's okay to take profits. You know what I mean? Like I used to tell myself, don't take profits until conditions change, right? That's fine until you look at your equity curve and you're not making as much money as you used to, right? The main goal when it comes to profit taking is just not to just book profits at 10%, 20%. It's like have some sort of structure to it. But if you're up 50, 60% on a trade, I think this trade was even higher. I think it was more like 80. It's like you need to be able to lock in some profits here. And another thing I'm doing going forward is I do not ever want to give back more than half my profits. So if I'm up 100% in a trade, I'm never giving back 50. I will never give back more than 50, because like we talked about before, there's a fine line there between, holding on because you want to be right or holding on because you're trading your process. So, and it's different for everybody. But anyways, price rips into demand. We get some buying. And then look at the shift, right? So there's a couple different ways I look at this. Is we got 45437, we have 45450, which was my initial stop out, because structure. That's it. The same way we identified the shift up here is the same shift I'm looking for here, right? And now if and when we close above this level, right, got to get out of the market. That's why it's very important to take profits, because if you neglected to take profits down here at what? 453.90, you would have had to give back 60 cents here, right? You would have had to give back 60 cents on options. That's like 40, 50%, right? You should never be giving back 40 to 50% of your return. So lock in your profits when you hit some targets. But then at this point, I'm willing to take the market long. Well, so let's talk about this. So we have open print right here. I just label it. And if at any time anyone that wants to ask any question, just rifle it right off. Otherwise, I'm just going to keep going. But yeah, just you could rifle anything off, any question or any comment or anything like that. So, okay, so price starts to shift. We could visually see the shift because we're not, number one is we're not getting a lower low, right? Now, it's really, I love bringing it back to the basics. Higher high, higher low, lower high, lower low. At this point, we are making lower low, in within intraday price action. So once you get a higher low right here, it's usually a pretty good indication market's going to reverse. Now, open print was right above it, so I did not want to tackle that. Then price rallied above open print. Now, going back to not waiting for that retest, I entered the market long above open print. Now, wasn't a clean retest, wasn't anything like that. I felt because this retested, it's okay to enter here. Now, let's talk about that. There's many reasons that's not okay. And one being, just because buyers defended this level doesn't mean they're going to defend this level, right? So I felt like I missed this. And after identifying the shift, I was confident we were going to revisit the highs. So I go long, stop below open print, price starts to rally, and cannot hold, right? Boom, comes down, stomps me out of my trade. So once again, like, reason I'm talking about this today is because I really want to energize the belief in everybody that waiting for retests are very critical, right? And whether or not, right? And every trader is different, right? It's not one, this isn't a one shoe fits all sort of thing. It's like you need to be able to understand when your edge is present and when it's not. Not just because someone says it, right? Do your due diligence. Look through your journal, right? Develop your own beliefs about the market, about your edge. And what that does is builds the confidence in the conviction within yourself as a trader. See, one of the biggest things that consistency, right? One of the biggest um, factors, right, are components that lead to consistency in the market is your belief within yourself and the strategy. And that's not something that just pops up, right? See, a lot of traders are like, oh, I could take a course and learn, and yes, you do learn a lot from the course, but what's the most valuable part in your trading journey is your confidence and conviction within your strategy and within yourself. And that's built through trial and error, and obviously going, okay, do I want to wait for the retest? In this scenario, no. Okay, how did that work out for me? Oh, well, not good. I got stomped out. Now, why did you get stomped out? Did you get stomped out because the market did something crazy, or were you just bending some rules here? Like, why did your trade not work? Why did you not make money on this trade? Right? Look at it. And if it's just because price action is being wild, no doubt. But this right here is not being wild. This right here is undisciplined behavior, right? Irrational. This is bending a rule, not waiting for a retest or any reason to take it. So yeah, I just really wanted to touch on that. It's been really important lately. And then price this day was it was pretty wild. Like I said, that first initial move was really good, but after that, you could see. I mean, look at the fake outs here at open print. It's like the market knew exactly of my open print strategy and just was messing with my brain. There was multiple. I mean, look at this short play. I got hit on this one too. This was a great play too. If you look at it right here, open print. We're rallying above it. We rally into when I took another long later in the day at open print on this retest right here. Rallies right here into 45578, gets met with a beautiful sell. Now once again, right, going back to supply and demand, is identifying the supply zone is literally identifying where that seller was before. Right? It's like that seller was one of our teammates called that out. He's like, no, that seller was still there. You know what I mean? So, Kyle he's like, no, clearly that seller was still there. And I was like, yeah, he's absolutely right. The seller was still very alive and present. And then price rips down, develops structure. I'm willing to put on a short play here. Once we got this red candle, right? So price rallied into this level. I was looking at it like this. I was like, okay, for me to stay bearish, I want to see sellers defend that 45554. I was looking for a retest here. Didn't get it. Didn't get any rejection. And then on this candle, I'm thinking price is going to rally above it. And then we get this fake out, right? So that's a really good way too, to understand who's in control of the market. And the way I was looking at this was, if we could snap this, I'm willing to take a short play all the way down to the lows. So that was my idea kind of going into it. And once we got that candle, I was like, okay, I'm going to put on risk here. Stop loss above the candle. Once again, risking 30 cents here to make a potential, what is that? $1.60 move. So, whether or not whether or not the price works for you is it's not up to you. It's not up to us. We can't, I just always like talking about how, and whether or not the trade works is kind of irrelevant in the scheme of things, right? Because if you're going, okay, and what does that $100,000 $250,000 a year trader look like? You're not going to say, oh, well, he made money today. You're going to be like, no, he traded his process. He traded low risk. He traded high reward. He traded with market conditions, right? Like, you're going to figure out reasons and attributes and characteristic traits of this person, right? You're not going to be like, oh, he made, money today. That's kind of irrelevant, even though obviously we need to make money. But what's more important is, are we trading some sort of systematic approach that we can use, right? That has statistical reliability, meaning you've logged it for the last X amount of months and you believe in it, right? Like that's the sort of behaviors we need to, and that's why journaling is so important. But anyways, I'm put on risk after this candle, stop above it, and then price rallies right into open print. Now look at how it's structured, right? So trendline broke, and now I'm doing the same exact thing as before when we were talking about where can I expect buyers. I'm going here, right? And then I'm going, okay, the lows. So when I go in the Discord and I'm like targeting the lows, right? I want you guys to think this, because it sometimes it's like, okay, this dude just went long here and he said targeting the lows, right? And what I want you guys to look at is go, okay, he's not just targeting the lows, he's looking at every demand zone on the way down. And I'm what do I call it? Monitoring the trade through structure, right? So we get a nice rally down to open print. We come up for a retest and we sell off through open print. So as this is happening, I'm lowering my take profit into more profit, right? At this point, I think about my options for around like $76. At this point, they're worth like 120, or I'm sorry, like 100, 110. At this point, they're worth like 150. So I'm bumping up that take profit here. And I'm going, okay, I'm going to get rid of that zone. Now I'm targeting 45454. And then it's very important for you guys to create more structure, because this candle right here was the reason I got out of this trade, because price is coming down here. But once we close above structure, that's usually a pretty good indication that this thing's going to reverse. So, and maybe it will, maybe not. I'm not willing to give back 30, 40% here to see, right? At this point, I'm like, all right, lock it, done for the day, taking the win. And that is a win. It's not every trade is going to be this sexy, beautiful market imbalance, right? It's not. It's going to be these base hits, right? It's going to be these right here. When I think of a good trade, or my goal for the day, it's trades like this, right? And I'm okay with that. It's like, okay, because we understand the conditions of the market right here. We understand the conditions of the market right here. So, and yeah, I did manage to take a loser here and a loser here, right? Which is fine. It's okay. But I've identified where I could have done better. And that's the goal, right? As long as you can identify what you did right, meaning in this trade, I had low risk, I had the retest, I had an idea of the conditions of the market, I was trading with them, right? We invalidated open print, invalidated this level. Okay, put on risk. This trade, we developed structure, but we didn't. At my entry, I didn't have any good spot to stop out. Any good. I didn't see the seller stopping out of position, right? And then it makes sense because the seller literally showed right back up, so he didn't stop out of his position. He probably added there. So, I feel like, the last couple weeks, this is how the market's been. It's been, we haven't really been getting those large continuation moves daily, and that's fine. We could still trade our edge entirely. We just need to be ready to, just stick to it. It's so important. And remind ourselves it's not always going to work perfect. Take profits based on your structure. And what this does, right, going back to this trade we took here, is it keeps you in that now moment. It keeps you in that now moment. Hold on, guys, 2 seconds. Got you, Chenny. 2 seconds. Grab this straw. Bada bing. Bada boom. All right, kiddo. You need anything else? You good? Where do you want this? All right. Okay. Hold on. Boop. There you go, baby. All right. Back. Okay. Now, another trade I want to break down here was 1120. This was a beautiful day on the market. This was a very good day on the market. I want to break down what was happening here. Now, once again, right, going back to exactly like what we were talking about there previously, what works and what doesn't, right? So diving into that trader accountability, right? Going through your journal, going, okay, what works, what doesn't, right? And I'm always going to, I identified market conditions. Okay. Now, going back to what makes a good trade, right? And that criteria we came up with, and if anybody has any other criteria they think is important for the trade, feel free to message me and we'll add it and we'll talk about it. Because it's very important that we develop a way, especially as a team, to grade ourselves, grade our performance, right? Like, what is our commonality, our end goal? What is our objective? Is it just to make money? Well, if it is, well, we're not going to do it. We need a structured way to grade ourselves, to hold ourselves accountable. And so, like I said, if anybody has any other idea that they want to throw in there, just let me know. I just started it last night. I used to have one back in the day, but as we grow as individuals and as traders, there's some more criteria. But what I want to talk about here, which going back to, right, because on this trade we rallied above a critical level, and we identified the shift via structure. Right, so right here we were able to identify bearish market conditions because we broke below and we came up and retested this 4 or 5 6 level, right? So this was our moment of, okay, sellers are in control. Now going back, right, to this day, if I'm looking for sellers to be in control here, there's a couple different areas to take this long, right? You could have took it long off pre-market high. Now, once again, why is pre-market high good? Because low risk, right? If I'm going long on this retest, right, this is a good entry for a few reasons. We're getting retest off this level, symbolizing the seller stomping out, and we have low risk. Not just, I'm putting a 20% stop. See, this is another thing I went through. I would just enter a trade and I'd be like, I have a 20% stop in, so I'm good. No, like, why is your stop 20%? And in this scenario, it's 20% because we have an area of structure. What is that? 45142, 20 cents away. So when I'm going, okay, I want to take this trade long, yes, I have a short. My stop is only 20 cents because structure's right there. If structure's not right there, then we have to understand we're stopping out just because we couldn't hold pre-market high. So once again, it's really important to understand why your risk is 20%, not just, I'm entering the trade, 20% risk, let's go. Right. And that's something we all deal with, but it's like, let's become aware of that, right? Why is my risk low? Because your ability to identify that low risk and the structure is going to help you understand when conditions are valid and when they're not valid. And so, okay, that's a great entry. But say you missed that entry and now price is rallying, right? Because I did not take that long there. And then price. So the way I'm looking at this, right, once again, is structure. I'm going, okay, we're forming bullish structure, rally. We're forming bullish structure, rally. Now, look what happens here when we go to retest structure. Because I'm going, dude, this is shifting. This is it's starting to get bearish. I mean, yes, it is bullish because we're holding above pre-market high, right? But just to dive a little deeper, what do I need to see to put on a short? What do I need to see to remain bullish? And I'm going, okay, I'm looking for a retest here at 45173 because this is a large red bar, right? Maybe sellers are coming in. I don't know. Let's let price tell us. So price falls below 45173, comes up retest, but we don't get any continuation with selling, right? So this right here, this candle tells me so much because at this point, I'm getting kind of bearish. But at this point, I'm going, okay, buyers are in control, right? I do not want to short the market here. Now I want to go long, right? So now you need to find a spot to get in the market, right? And that was this candle for me. On this green candle, right, I was willing to put on risk, and my stop was below this candle before it, right? So once again, this isn't a quote-unquote retest of a critical level, but the same end outcome goal is present of understanding the conditions of the market, right? This is my way in my mind of understanding that buyers are in control. And it's because I can clearly tell that sellers aren't, right? So once again, right, like instead of just longing pre-market high, which in this scenario there's no bad reason for that, right? That's completely fine, right? We're holding. Like I don't want, like another thing that's happened to me before is I'd be like, oh, longing pre-market high, that's too easy. I don't want to trade that way. No, dude, keep it easy, right? Like don't overcomplicate it. But at the same time, if you do miss it for whatever reason, maybe you didn't like the setup, maybe there's a critical level above it, right? There's other ways of understanding that buyers are still in control of the market, right? And that was it for me. Price was holding relatively well. So, and then once price starts to rally, well, to do this properly, I gotta grab my upside targets here because another reason I was very bullish this day, and we put this in the pre-market plan, is we identified this wedge here, right? So chart patterns, once again, are our only way of understanding large money's behavior. It's very important. We had a couple different levels here. Pre-market high lined up with that one, but we also had this other level here, and then going back to the 1 hour time frame. Closing above this level. Notice I only really like to use this closing above a level thing on a larger time frame. When you're closing above a level, larger time frame, we've identified the wedge, we've identified the breakout. Okay. Now, obviously, this doesn't meet criteria for just entering a long. Maybe if I was a swing trader, but I'm not. So, but at the same time, we can use this information to go, okay, we're now holding above 452. I had no, let me find where, hold on. So let me see. 45462. Let me find my previous targets here. Okay, so I had a target here. Top of this supply zone. This level, right? We're holding above 45112, right? Very critical to be able to see this, right? So when the market looks like this, right? Okay, we're not holding above 45132. But once you're getting strength above that level, it's now, just because it's a green daily time frame candle at 10 o'clock doesn't mean trust it. Obviously, daily time frame candles take days or it takes a day to close. But at the same time, that's when you dive into that 1 hour and go, okay, holding above this level is big confirmation for longs. And then we had this gap fill all the way up to, what was the low of this? It was 45549. So 45544. Okay. So those were my upside targets. Let me just make them a different color here. Okay. So look at the upside targets here. They're super far away. I mean, not really, but they are. Now going back to So this gray box here, this was that daily time frame level. So going, okay, we're showing strength in this supply zone, right? Like, once again, identify your area of value and then identify the chart pattern in the area of value, right? That's part of the process is identify the level or area and then identify the pattern within the area, right? What do we need to see to understand buyers or sellers are in control? And then obviously breaking above pre-market high, coming down for retest, right? Break, retest. That's the chart pattern within the critical level. Bam, I'm in. I'm not thinking anymore, right? That's how I try to. That's our goal there. Is like, okay, I've identified the conditions of the market. I've identified the chart pattern, which gives me low risk, which gives me confidence, which gives me conviction, right? I'm in. So that's like the process. That's what I consider and constitute a good setup, a good trade, a good day. Identify the conditions, identify the low risk, take the setup. And then price went up. This trade took a while to manifest. It was like we got this beautiful, nice rally here. I remember I was overthinking this so much, but that's what we do as traders. It's right. I'm in this long. And we're rallying up to 45221, right? It's always so much easier to go back and look at these, but when in live time, right, we get this massive sell-off, right, within 2 minutes, right? Massive sell-off. And this is why it's important, right? Because I entered this trade, right? You gotta wait to bump your stop up. You gotta like kind of, you gotta kind of earn it. And what I mean by earn it is you gotta like stay in the trade. Like if I'm entering the trade here, and I have upside targets of 45364 and 45544. I mean, those are pretty far, but let's see what the market gives us, right? And we got to remember, there's going to be liquidity grabs. If large money, if you've deemed conditions bullish and you've deemed targets $2 away, $3 away, it's naive to think liquidity grabs aren't going to happen, right? So just always protect yourself. Right, I entered this trade here. My stop's down below here. Let's see what happens. Keep basically what I'm saying is keep that stop in until you start to see more bullish structure. So once again, we rally above this. We rally into it, and we get that sell off here, liquidity grab, and then we close above this level. At this point, let me just do this. Ready? I'll make this my stop. Loss. But at this point, I'm going, okay, we've rallied above. Where's my structure at? Bam. Okay, we can keep it right there. And you're not going to know until it really happens, right? Because I got my structure at the top of these wicks. And then I go, okay, but hold on. Let's put it there. Okay. So now once we rip above that, I'm taking my stop loss, which is this red line right here, and I'm going, okay. Let's bump that to like right here. And then it starts to go. And then we start to create some new structure here. And once again, I'm going, what do I need to see here to stay in the trade? Now, price rallied above here. And I don't know if you guys remember this, but I ended up taking profits off the top on this candle, right? Because price was hovering. But look, conditions were still extremely bullish, right? The reason I took profits here is because I didn't really, I had my upside targets. They're still, and this is literally what was going through my mind. I'm like, dude, my target's still like $1.50 away, or what is that? $1 away, $1.20. I'm up like 70% on this trade, right? So I sell 70% of my position. And now, actually, I think I sold 90%. Yeah, I did. I left one contract. So I bought 10 contracts. I left one contract. And I'm like, whatever. My daughter gets up. We start playing some Minecraft. And I'm just like, okay, Then out of nowhere, we get that clean break above the trend. I mean, look at this. These are 2-minute candles. I couldn't wait much. Why are we making these decisions? Like, it's like, just let the trade play out. When you've identified your entry, you've identified your target. And I'm not going to go that far into it because you got to take profits, right? There's nothing wrong with that. Lock in the bag. So I'm not even going to go any further on that. It's fine. But you can see here, structure was never invalidated. Hold on. Structure was never invalidated here. It was a little tricky because it's gonna play some games, right? I mean, and this is where once you're in a trade, I highly recommend you just stay on the 5 minute, because you could always find a reason to get out on the 2 minute. But you can see here, buyers held, and then we got this massive rip to the upside. Massive. This was insane. Just rallied and right into our target. I mean, like clockwork. It was insane. I was blown away at this point. I was like, oh my Lord, insane. Massive rip all the way up to our target. And if this, guys, if you take anything from this, just let it be that these levels have so much volume that it only makes sense as an auction perspective. Think about it. If you're selling cars, right? And let's just say you're selling a bunch of Honda Civics, and there's a million buyers coming in at $30,000, right? And you sell your Honda Civic for $28,000 or for $32,000, but you have all this volume up there at $30,000 or down at $30,000. It only makes sense. Price is going to rally into that level and fill the liquidity, right? It's just how the auction works. So it's just, I love seeing it. It just really validates the belief behind what's going on here. But price rallied right into it. At this point, you got to use price action and understand where you're going to put your stop in, where you're going to put your stop out. I'll show you guys where I end up getting out of this trade. Price rallied. And now, once again, I'm just using structure here. And then as I'm making more and more ROI on this trade, I'm moving this up, and I'm getting more afraid to give money back. Where you would think the opposite. You would think, dude, you're up. I think I was up 270% return. I'm like, dude, let it, give it some room to breathe. Instead, I'm getting more involved, and I'm going, okay, I'm just going to make my stop tighter and tighter. So I end up moving my stop all the way up, locking in. I ended up getting out right on this candle, right? Which literally reversed seconds later. But still a really good trade. And once again, going through back to that criteria we were talking about in the beginning, it's all about identifying the conditions of the market, putting on risk, low risk, but understanding why your risk is the way it is. So going into this week, guys, let's just do a quick little recap of the conditions, what to expect. We are heading into, those, once again, let me get rid of some of these here. A lot of these critical levels up here, supply zone. So just be aware of, right, 45544. Looks like we closed right on it on Friday. But if we can get a retest, guys, up here at 45816, we're going to be approaching a whole different market, right? Things have been extremely bearish for a while. I mean, I'm talking since 2022. We have been fighting very bearish conditions, but now we're showing a lot of strength. So if we can get above this 458, right, 16, I mean, we could really, which is $3 away, right? We could really start seeing 462. We could really maybe even revisit the all-time highs, right? So we're going to be coming into some awesome market conditions if this can happen. And I just want everybody to take the time, look at what trades are working. I mean, look at the conditions, guys. Things they're getting. If this was a 5 minute time frame, we would all be going along right now, right? So let's just, and obviously don't just approach Monday with extremely bullish setups. Obviously, let the market prove to you they're still bullish. But guys, let's stay focused on the overall collective mind of the market and market conditions. Things are looking bullish. If we can hold 46265, great. If not, so be it. We'll play other shorts. But I just wanted to just break that down before we finish up. So I'm glad everybody that showed up, guys. You're putting in the work, right? It's Thanksgiving. We have every reason to be fat and not do anything, right? You guys still showed up. I loved it. Thank you for showing up. This is exactly what we're about. It's all about bettering yourself and diving into your journal. So guys, dive into the journal. I posted that criteria I called it grade your trades. It's in Trading Metrics. If you guys want a way to grade yourself, use it. I hope you guys have a phenomenal weekend. If you guys need anything from me, message me. I'm here for you. And I will see you guys Monday.
Here's Joshua. Thank you.
Yes, sir.
Thank you. Appreciate it, man.
Yeah, man.
All right.